plenty of earnings to get across this morning. We'll see the market reaction, obviously, to that. Let's now, though, get a broader look at what's going on, both locally and internationally, and how it is impacting markets. Peter Maguire joining us from XM. Pete, welcome back. This time last week, we didn't quite anticipate the volatility we're going to see, did we? What a wild week it was.
Absolutely, Andrew. I'll tell you what, it was showtime, wasn't it? I mean, just incredible what we saw Monday morning with Tokyo, and it just unwound. And I think it probably built from the Friday before, because they said it was highly leveraged in the sense of all of those ETFs and so on. In the Nikkei, it dropped 6%. And then what we saw Monday down 13, nearly a 20% fall over that 2-day window. So, yeah, extraordinary.
All right, let's go to that daily performance, what you're seeing at the moment.
Yeah, I mean, look, if we start at the bottom and move up, gold's been choppy, and it's still very close to that 2,500 range. You know, the best part of 24.75, 24.74, Andrew. Euro pound was a pretty good market to short. And of course, the yen versus dollar, that's always been, incredible volatility. As far as oil, well, it's given up a little bit of those gains, dollar softness, and then we move to the top. Yeah, I mean, Great British Pound, talk that you're going to see, a further cut. If you're looking at the New Zealand dollar, what are they going to do? And then, all the other currencies. So there's been no shortage of opportunity, and I think this week won't disappoint either.
All right, well, let's unpack what we're likely to see this week, beginning in the States. Yep. We do have that key read on inflation. What are the expectations?
Where you've got, so many different handles in the sense where your CPI is. You've got month-on-month figures. We take all that on board. It's expected to increase from 0.1 to around about plus 0.2%. So that could be a little bit of a handbrake. But then we're looking at CPI expected for 2.9% year on year in July, easing slightly from the prior 3%. And then you've got core CPI. It's forecast to slow from an annual basis of about 3.3 to 3.2%. So that seems to be the consideration at the moment, Andrew. And then will that be enough for the Fed? Is it going to underwhelm or is it going to overwhelm? And we've got to wait for those numbers to drop. And in turn, what impact that has to a decision-making policy from Fed Chair Powell and his fellow members.
Yeah, because perhaps more importantly, we're going to get a good read on retail this week, not just in terms of the data, but also got a couple of key companies in, certainly Walmart is one of those, and Home Depot as well, which, I mean, the focus clearly, and this emerged last week, are just concerns about where the economy is tracking more broadly, given consumers have pulled back. So what can we expect, do you think?
Well, this is the issue. I mean, your typical time that anyone in the States would be looking at doing any form of Home Depot sort of work, it's a supercharged or on steroids sort of Bunnings for Australians. So there we are, and from a hardware sector, so people buy in that August, September period, and then they start doing their work as it gets a little bit cooler, moves into autumn, of course. So you would expect that from a consumer standpoint, they're pretty well tapped out from a credit card respect, but there could be some, I think, relatively good numbers across both of those corporations, and we've just got to wait for the numbers to drop. And the impact naturally, because, if you're looking from a Fed perspective, they're very big targets that they take from a consideration standpoint as far as consumer confidence.
Pete, let's move to the UK, see what's going on there in the wake of that rate cut, the strength of the economy. How are you reading it at the moment?
We've got UK GDP, Andrew, and that's going to come out this week. So there's the thoughts as far as Q2, expecting around about 0.7%. The same as Q1. Bank of England, there's about a 30% probability of another 25 basis point cut in September. So that seems to be the general mood. Headline inflation at 2% and probably edged up in July to 2.3 year on year. So sit tight, and we've just got to see the impact of those numbers, and they drop, and does the pound take a little bit of a hit to the downside?
Yeah, of course, you take a look at the local Reserve Bank, and we're looking like the outlier at the moment when everyone else is cutting, including expectations that the Reserve Bank of New Zealand is going to cut this week.
Absolutely. When you're taking on board the RBNZ, there's about a 35-40% probability that that'll happen. I think that were the numbers I was looking at over the weekend. So I'm erring on that side. I probably will cut, and the fabric of their economy is fairly weak. So yeah, maybe we are going to take a lead from them, but it might be a number of months until that happens. I don't know whether we'll do something by end of year. Everyone seems to have an opinion. They're like noses at the moment, aren't they?
They are indeed. Pete, let's round out with what we're seeing in the crypto complex now. Of course, given that extreme volatility and the risk-off trade we saw last week, no surprise, I guess, the likes of Bitcoin hit hard.
Hit hard, yeah, and it certainly did, Andrew. I mean, you were at 70, then all of a sudden you're nearly at 50, and then it's bounced massively back to 61,000. So it's just incredible volatility, and that is a market not for the faint-hearted. You've got to watch it and watch it closely, but it never disappoints as far as vol. And I would expect that to continue leading up to the Fed policy meeting decisions and how it ratchets up over the next 4.5 months, leading in first off to an election in the US and up till the end of 24.